care of that. So welcome everybody to this webinar to talk about the impact on the secondary market and reverse supply chain related to COVID-19. Bit of a unprecedented time for us across our network, and we want to make sure that we share some information that we've got with people who are perhaps going through some of the same challenges. My name is Paul Bush. I'm a director here at bstock in the sales area. Also with us today is Linus Calens from C.H. Robinson. Linus has been with C.H. Robinson for 19 years, and he leads all of the freight consolidation services for North America. That means he works with store distribution, reverse logistics services, 3PLs. So he works directly with retailers, distributors, and liquidators such as ourselves. Also joining us, Eric Moriarty. Eric's primary role is developing our network from the seller's perspective. Finding new sellers, building up their marketplaces, new services, solutions, whatever is required to help them get higher recovery and more efficiency out of their liquidation process. And also joining us is Garrett Sievers, our VP of Marketing. Garrett's primary responsibility and why he's on this call is to build out our buyer side of the network to make sure that we've got a healthy amount of buyers who are looking for product on behalf of the sellers, and educating those buyers, keeping them engaged, building out channel strategies, whatever it takes. So just a quick one slide on bstock, just so everyone understands what we do and why we think we've got the information that you'd be looking for today. We look after hundreds of sellers across our network. 65 of those are through private marketplaces for large retailers and manufacturers. 9 out of the top 10 retailers in North America, major manufacturers in apparel, CPG, appliances, mobile cell phones. And we help those sellers generate over $1 billion a year annually in auction revenue. We do that through connecting them with our large base of database of buyers, over 500,000 buyers in 130 plus countries. And we generate thousands of auctions daily, 2 million bids a year. So a tremendous amount of transactions that we're going to share some of that data with you today. Primary value that they get from the seller's perspective, it's recovery rate, operational efficiency, velocity in terms of being able to move that inventory quickly, and control of their brand or channel control. And for the buyers, it's about building them a trusted channel where they can find product, give them easy access to inventory, accuracy, margin, and a consistent base of inventory as well. So current landscape, no surprises here for anybody, but just how it affects the reverse logistics and liquidation space. There's really been an uneven application of store closures. I mean, we've got some stores deemed essential who are still moving goods and using it to move some of their product that they typically would have liquidated. And then you've got other stores that just can't open at all, and they've got products sitting on shelves and warehouses that can't move and keep themselves in business. On the flip side of that, for our buyers, we have the same issues. They've got some closed, some are still able to operate, some can operate on an e-commerce business, but just having cash flow and having the space to be able to store product at a time when they can't sell it easily is very difficult for them. We've got some essential goods that aren't moving into the secondary market as they once did. Anything from a cleaning perspective to paper towels, paper products, and so on. Those are now being routed directly into the A-goods market, and product that typically would have found its way into the secondary market is just non-existent. And non-essential are moving very slowly. I mean, apparel, appliances, some mobile devices. There's a variety of categories that are just really, really slow right now, and may take amount of time before they build up. Labor pool is obviously shrinking with furloughs and layoffs. Processing returns has been pretty much put on hold by any retailer. Retailers are afraid to handle the goods for fear of their employees getting sick. And staff in the reverse logistics operations have been moved typically into forward logistics to help the supply chains keep moving. And of course, in the logistics market, we've got a lot of uncertainty going on there as well. And in fact, we're going to turn to Linus now. And Linus, maybe you can take us through in a couple of slides of what's going on in the logistics space.
Absolutely. Thanks, Paul. Good day, everyone. For those of you not familiar with C.H. Robinson, we are one of the world's largest logistics platforms. We work with nearly 200,000 customers across the globe and across many different industries to deliver optimal supply chain solutions. And so before I jump in, I'd like to thank bstock for hosting this event and really giving us this opportunity to discuss the current market conditions and how we navigate both, really the here and now, as well as what happens when the economy starts to ramp back up. And so, really logistics sits in the middle of all of that. So today I'm going to just take a few minutes to share an update on what's happening on some of the core components of the North American logistics marketplace. So we'll talk a little bit about over-the-road transportation, particularly around truckload and then less than truckload. We'll touch on what's happening in the warehouse space. And then I'll kind of finalize by talking a little bit about this idea of supply chain collaboration, which is really how all of us have to work together in kind of new and different ways throughout this ever-changing environment and landscape. And so, we'll start on the truckload piece. And if we want to go to the next, if we can advance to the heat maps, Melissa, that'd be great. So really what you're seeing here on the truckload side is, what we're looking at here is in a historical snapshot of the DAT posted load to posted truck ratios. And we often look at this and we look at the transactional marketplace as an indicator of the equilibrium between supply and demand. And so as you can see, really over the last, let's call it 6 quarters, an incredible degree of consistency and an incredible, in the equilibrium of supply and demand. The last 6 weeks, as you can imagine, has been anything but consistent. And so really that essentials marketplace drove high demand in late March, which caused a shortage of equipment in some pockets. And so that was evidenced by load to truck postings increasing by over 20% in late March for a nearly 3-to-1 available load to available truck ratio. However, as the non-essential markets like automotive and other industries started to slow or even come to a stop, that equipment shifted to the essential marketplace. And so in just 2 weeks, just a 2-week time span, we saw that ratio drop by nearly 70% from 3 loads per truck posted to under 1 load per truck posted just 2 weeks later. And so really what you're going to see is this is going to cause an abundance of capacity in the short term, but expect more disruption and greater equilibrium as those non-essentials come back online and that equipment repositions itself. As we move over to the LTL space, the LTL space is a very different and very disciplined carrier base. So LTL carriers remain disciplined on contractual pricing and service. And so really, what we're seeing is they're operating much as they normally would. What they are doing to keep costs in line is they're adjusting their current business levels. So they've furloughed employees, reduced driver hours, and they've laid off back office personnel. So although we're seeing some diminishing volumes, LTL pricing is holding as carriers implement internal cost reduction measures. I think one of the more interesting trends that we're seeing in the LTL space is that although order sizes are diminishing, LTL carriers are reporting to us that they're seeing heavier and larger shipments. And we're also seeing that across our C.H. Robinson consolidation network as well. Fewer shipments, but larger shipments. And I really speculate that this is the result of probably 2 different trends. First of all, you've got the essential order sizes increasing. So what was maybe 3 or 4 pallets is turning into a half a truckload or a 10 or a 12 pallet order. Larger LTL and consolidation sizes have actually even moved into the truckload space and are now becoming full truckloads. Conversely, non-essential items and order sizes are diminishing. And so what might have been a full truckload before is now becoming a large size LTL or consolidation order. And really the dynamic that we want to pay attention to there is modal conversions can be really tricky. It's one thing to say that, hey, something's now 5 pallets, something that was 5 pallets is 20 and let's move it into the truckload space, or vice versa. But you've got different pricing structures, different transmit times, appointment processes for LTL versus truckload often differ, and retail scorecards and expectations differ depending on the different type of mode and service that you use. So, an effective way to manage cost, but also something that we need to put a lot of thought into before we do those modal conversions. The next piece I'll touch on is really warehouses. And so we've talked a lot about this, and while some manufacturers have shut down, most logistics warehouses, really those that perform freight consolidation services and provide public storage and inventory and fulfillment management and the like, they've worked hard to stay open. And when you think about it, most of those type of providers carry at least some or a preponderance of food and beverage and personal care and medical products. So they've been deemed essential, and it's critical that they remain operational. However, many of them are being flooded with contingency freight. And really what I mean by that is additional emergency stock that some of their state and local governments are asking them to carry. We're seeing non-essentials that were trapped in the supply chain. In other words, the order shipped, but now as retailers, put a moratorium on taking non-essential items, those orders sort of got trapped in between. And so warehouses are getting flooded with those type of opportunities and that type of freight. The other thing that you're seeing is enhanced protocols needed to keep frontline workers safe have driven up dwell times and slowed operations. And so think about things like, what we've needed to do to keep those frontline workers safe, more frequent cleaning and disinfection of common areas and of the warehouse itself, social distancing between workers on the floor. Really the driver to warehouse experience has changed completely. And so drivers often now aren't even allowed in the building and have to take different measures to have paperwork signed and whatnot. And so there's been some really necessary trade-offs made between speed and safety that's causing some additional slowdowns on the warehouse side. I'll really final by kind of talking about, this idea of supply chain collaboration. And as we know, reverse supply chains and liquidation supply chains can be complex and highly unpredictable. And we always think about this at Robinson, that in a stable and predictable supply chain, things like lead time are maybe a little less important. Collaboration, though always important, can be a little less frequent. Maybe monthly reviews or QBRs or annual reviews will suffice. On the flip side, when you think about less stable supply chains or in times of disruption or turbulence, collaboration really becomes critical. And so if we think about all the rapid changes that I just kind of blew through over the last few minutes, truckloads, ratios, jumping around all over the place, LTL order sizes moving into truckload quantities and vice versa, and modal conversions, and then warehouse workers and drivers having to work in new ways that are literally changing in some cases hour by hour and state by state. Some of those trends are going to hold and some may inverse as the economy turns back. But one thing is really for sure in the short and the medium term is that this pace of change is going to continue. And so we really believe that the best strategies will be the ones that anticipate and react to that change. And that's really done by staying close with your trading partners. And so having daily and weekly communication, making sure that we all get caught up in what's happening on the day-to-day. But let's make sure that we also leave time to talk about some of the trends that we're seeing in the marketplace so we can anticipate how to stay ahead of them. And so with that, I'll turn it over to Eric to talk about some inventory and other key trends.
Thanks, Linus. So I'm going to talk to you about what we're seeing in the secondary market from a seller perspective. What you're looking at here is a chart over the last 13 weeks, the volume of inventory being sold in our network. And the blue line is this year, and then the yellow line is the same corresponding time period last year to provide some context. And as you'll see, the chart, starting in the beginning of March, really starts to kind of decline through all the way to the end of March, and then it's starting to bounce back in April. This is the blue line, and so what we're seeing is that the coronavirus, is having an impact on the secondary markets, just like it's having an impact on the primary markets. So I think what we're seeing in the dip of volume during the month of March is things like shelter in place, employees being furloughed. There are just no employees in the warehouse to actually liquidate inventory in some cases. And so what we're, the primary markets, are relatively stagnant, except for, essential goods. Toilet paper and paper towels are flying off the shelves. And so what that's causing to happen is inventories backing up. And so the need for a secondary market is increasing. The need to liquidate inventory is kind of going up. And we're seeing sort of large increases in overstock inventory in our network, more so than normal, because the inventory is not being sold. There's no stores aren't open to sell the inventory, and we're actually seeing a little bit of softness relative to normal on the customer return side, because many stores are actually not accepting returns right now. So there's lots of nuances going on that are kind of behind these numbers. And Paul, I'll just ask you to kind of go to the next slide to talk about one of them. So what this chart represents is the comparison, again, over the last 13 weeks of what's happening with the volume of inventory for essential goods in our network and non-essential goods. And so the chart is normalized. So what these lines represent is what is the change that's occurred over time from that first week there. And as you'll see, starting in the beginning of March or so, the blue line is the essential goods. We've actually seen quite a bit of drop off in volume coming to the secondary markets for essential goods. And that's because what the retailers are doing is they're actually pulling inventory from that was previously slated for liquidation into the secondary markets back into the primary markets, because there's such high demand. And what you're also seeing there on the yellow line is maybe a slight dip in volume in non-essential goods in the beginning of March, but you're really starting to see it kind of take off there, and we're really expecting that to continue. As you can see, the last chart is April 13th, so we have data going past this through today, and we're seeing that volume trend increase. The need for liquidation is growing quite a bit, and we're receiving lots of inbound inquiries from companies who are really looking for a large buyer base to purchase their inventory. Their traditional methods of liquidation are just not able to absorb the volume. So the discounters or the large liquidators that they're normally selling to, in some cases they don't have the cash, or they don't have the space in their warehouse, or whatever the case may be, but they're not able to handle the volume that is going on right now. And so we're receiving a large number of requests right now to sell in our network. So if you just go to the last slide, Paul. At the end of the day, what does everyone really care about is, what is all this stuff? What impact does it have on price, right? And so just like the last chart, this is the impact on price over the last 13 weeks in both essential good categories and non-essential good categories. The blue line is essential, and the yellow one is non-essential. And again, it's normalized, right? So the first week there is 100%, and it's measuring what's the change. And as you can see, the blue line during the month of March is exploding, right? So demand for essential goods is really high, and that's making prices go through the roof. I think there's been about 130% price increase in our grocery category across that time period. And then it's starting to come back to normalcy, in April. And the inverse is true for the non-essentials, right? As you're seeing softness in the primary markets, the demand for those goods has actually softened a bit, during the month of March. But as companies adapt and kind of return to normalcy, you'll see that prices are kind of returning back to normal levels in April and as we go forward. So, from the seller side, there's some pretty significant impacts, but one of the key things about the network that we operate is that there are quite a few buyers, and that is really muting the impact that some of these sell side trends are having. And so that's a good segue to turn it over to Garrett, who really represents the buyer side of our network. He'll talk to you about some of the things that are going on there.
Thanks, Eric. Appreciate the handoff. Good afternoon, everyone, or good morning. I'm going to talk to you about the bstock buyer base. Those are what are really the small businesses of the U.S. And with hundreds of thousands of buyers in our network, we have a good sense that they represent what our typical small businesses are going through. And it's really no surprise, COVID-19 has hit them really hard. The graph on the left just talks about, on March 13th, the U.S. declared a national emergency, and immediately workers' hours were cut, and that corresponds with the rather, heart-wrenching stories you've heard of small businesses around the country and what they're having to do to make ends meet. Now, small businesses are some of the most innovative and gritty and successful employers in the country, but they're being challenged with what's in front of them right now, as we all know. And they're struggling with the subsidies and the upcoming government subsidies that are being made available. And as of right now, that has not been able to offset some of the revenue shortfalls that they've seen. So if you go to the next slide, we polled our buyers from across our network, and we saw some interesting things we wanted to share with you. It's not a surprise that bricks and mortar have been impacted significantly more than those who have primarily an online business. So we've asked our bricks and mortar customers and buyers have had a 22% more severe impact on their revenue. And they're seeing that revenue in significant declines of over 50%. Now, they're doing everything they can to offset that by reducing store hours, furloughing, or in some cases, letting go of employees, changing the way they buy, and also changing the way they sell is happening in real time as they adjust to the new marketplace and their consumers' demands. On their buying intentions, the online retailer is more inclined to make additional and increased purchases in the next 90 days. So we asked them what are their intentions over this time period to buy inventory. And small businesses and our buyers who have online are more likely to be buying increased inventory the next 90 days. The categories are shifting, however. It's not a surprise. The categories they're interested in are the things that, to Eric's point about essential, are critical to their consumers during this time period. Computer equipment, consumer electronics, health and beauty, home and garden, and grocery are all in demand. And so we're seeing that in the marketplace. As a result, there's categories which historically have been extremely strong in our marketplace, but given the external circumstances, we have seen a shift. Apparel, as noted, appliances, although there are bright spots within there, storage devices and refrigeration being among them. Automotive supplies, books, movies, and music, and cell phones there's less intent to buy them in the near future. So it's been quite a shift as our buyers are adjusting to the realities that they're faced with in the market. If you go to the next slide. So with that, as Eric showed, we've seen some changes in our platform, and I took a look at how many bids we're seeing on our platform per auction and the number of bidders since March 13th, using that national emergency declaration as a fundamental point. And the reason I'm focused on bids and bidders, because in our auction format, that's what drives value for our sellers. The more bids we have, the higher recovery rates we see. And that's a real value of our platform with regards to a distributed buyer base. So we want to make sure there's plenty of active bidding for the merchandise that we put up for auction. So you see on the top graph, prior to March 13th, and then with that declaration, we saw a slight dip in bidding per auction, but not significant, not as significant as we thought could have happened. And it somewhat has rebounded to pre-COVID-19 declaration March 13th levels. So it's a resilient marketplace as our buyers are just adjusting their buying patterns and behaviors to adjust. Bidders per auction is also another key metric because it represents the amount of buyers we have on our platform. And each one of these bids and buyers represents value to sellers because there's a diverse set of buyers to take care of the inventory. So equally, we saw a slight shift downward trend on bidders per auction, about 5%. But again, it's rebounding up 6, and it speaks to the resilience of the buyer as well as the platform to give these small business buyers the opportunity to get the inventory they need in these changing times. Paul, I'll turn it back over to you.
Great, thanks, Garrett. So, gentlemen, what I'd like to do is, you gave me some projections of what you see over the next 90 days or so, and also some takeaways. So I just want to run through those quickly, maybe ask a couple of questions, and then we'll get into the Q&A session. But Garrett, first one, you talked a little bit about the demand not returning in full force. It may be sporadic, it may be fits and starts. Maybe give a bit more detail about what you think we'll see there from the buyer side.
Yeah, the buyers are going to adjust to what is changing circumstances across the country. With a diverse buyer base, obviously we see states making decisions on when they're quote unquote going to open up, and that's going to affect our buyers. And so we'll be monitoring those demand frequencies. So you'll see it in pockets emerge out of the COVID-19 time period based upon some of those state decisions. Now, it's early in that process, but I do think our buyers are adjusting to, even if their state doesn't open up and at the same rate and pace as others, adjusting the way that they serve their customers via curbside delivery, curbside pickup, delivery methods, and doing more business online. So it's going to be a gradual growth, and we'll see it emerge in pockets. And we have buyers across the country, so we'll see that particularly pick up as states start to open up.
Okay. And Eric, from the seller side, you talked about some pent-up demand, and some of our existing clients are calling us and saying to be prepared. Maybe talk a little bit about what you see over the next couple of months.
Yeah, I think it's going to be sort of phases. Right now, we're in this phase of uncertainty, right, where no one really knows when things are going to kind of end and at least start to come back to normal. Shelter in place, employees are furloughed. But over time, at some point, they will start to kind of return and get back into the warehouse and start liquidating. And so the way that I see it is there will be, this large, kind of chunk of inventory during this initial phase that will be overstock inventory. And that's going to get sort of flushed through the secondary market, sort of like a pig through a snake over time, right? And that'll be the large kind of first wave. And then I think the second wave that we'll see is as, stores start to open back up and they start accepting returns again. And again, employees are in the warehouse to process all these things, and they're not worried about contamination risk. I think you're going to see a second wave of customer returns kind of spiking down the line. And then over the long run, right, I think, one of the key things that's going to happen is that just in general, there's going to be a large volume of inventory flowing into the secondary market for the foreseeable future. We really kind of expect volumes to explode from sellers going forward as their traditional methods of liquidation or primary selling channels, aren't able to handle the volume of inventory that they actually have.
Yeah, thanks, Eric. I'm actually impressed. When we prepared for this the other day, I didn't think you were going to use that phrase, like a pig through a snake. I'm impressed. I actually threw that out there.
It's a good analogy.
So, and I'm going to come back to that in a minute, but Linus, I just want to ask you, what are you hearing from you've got a large, diverse set of customers. What are you hearing? Is it the same kind of fits and starts? Do you think you'll see more sellers responding before buyers? What do you think?
I'd mirror and echo what Eric just said, and I'm trying to get through the pig through the snake imagery is in my head right now. So as I think through that, it is so very unpredictable right now that I think that, what I've heard is it's not going to be a light switch, it's going to be a dial. So we're just, watching that closely. And so, I would echo Eric's sentiments for the foreseeable future. There still should be an abundance of capacity. I would just, continue to watch some of those modal shifts and how we handle that as this thing starts to turn back on.
Okay, great. I want to skip to the last one here real quick, and maybe ask Garrett and Eric to kind of comment on this. So we're hearing from customers outside of our network who are calling us their traditional liquidation channels. They're having difficulty moving product through those channels, or sense they're going to have difficulty going forward. So Eric, maybe talk a little bit about that, and I'll ask Garrett to also comment from the buyer side.
Yeah, definitely. I mean, think about the discounters, right? Even TJ Maxx isn't even open right now, I think. And so, but even if they were, right, the normal methods of liquidation, just the volume of inventory that's out there right now, because everything's shut down, except for grocery stores and, the companies that are deemed essential. There's just going to be this backlog. You got to kind of unclog the drain a bit. And so, and of course, you can kind of send it through those channels. But the problem is that what impact does it have on the ultimate price? And so I think Garrett will probably talk about this a little bit, but one of the keys that we see as one of the main takeaways from the current situation is just the importance of having an access to a large buyer base at your fingertips, because if any one of them goes down, if you only have 5 people that you're selling to and 3 of them don't have any cash right now, you're kind of held over the coals on price. But if you have 300,000 buyers at your fingertips, the impact is muted. And that would be what I would say is kind of one of the key things that we're seeing, is that sellers are really starting to come to us because they are in that current position, and we're helping them get out of it.
Okay, and Garrett, maybe just add on to that. I mean, do you think the buyer network is ready for what's coming?
I do. As I shared, there's resilience here, and they're adjusting. These are small businesses that can adjust to these changes faster than their larger competitors. And so while they're changing, we've heard stories of some of our buyers moving from non-essential to essential categories so they can keep their businesses up and serving their customers. And so they're able to make those shifts very quickly. And the fact that, we're now in week 6-ish of this shelter in place, you've seen those changes start to materialize, and an increase in bids and bidders as they adjusted to the change, and it's starting to, I think, move in the direction. And as things open up, I wouldn't, second guess a small business to figure out how to make it work for their customers.
Okay, great. Key takeaways. I'll give you guys one thing that's a key takeaway from all of this that we've talked about so far. So Linus, we'll start with you.
My key takeaway would be that supply chain collaboration. Be in close communication with your providers like bstock, so you know the latest plans and approaches. Be prepared for an influx of retail returns when this pandemic subsides.
Okay, and Eric?
Yeah, I always want to say 2, right? But I think you specifically said 1 for me. So, the one that I would say is that cash is king. I think the lesson learned from all of this that companies will take away over the long run is the importance of staying lean and prepared for that rogue wave, if it ever does come, and just having the capability to quickly turn your inventory into cash. Having access to a large buyer base, I think, is kind of the key thing. Companies will liquidate a lot quicker going forward, so they don't find themselves in a tough position.
Okay, and Garrett?
Yeah, I think, it's that diverse buyer base, the benefits of a network that serves 2 sides, both sellers and buyers, is this diversity of buyers across categories, across regions, across types of stores. And so they're going to adjust and change with this. Now, that doesn't mean they're not going to do it with, that's been painful for them. Let's not be mistaken there. but that diverse buyer base across all the different vectors of the business is going to prove to be valuable going forward, and it's showing so recently.
Okay, great. So while I'm figuring out how to get to the Q&A section, I do actually have one that just come in here. This is really for, Eric. Eric, are there specific strategies that sellers should be thinking about how to prepare for returning to normal? I mean, should they be preparing their loads or auction lots differently? Should they be thinking about how to sell this product? What should they be thinking about when their product starts to come back into the secondary market?
Oh, geez, there's a lot of things. Trying to think of how to best answer that question. I mean, just the way that it was phrased, that the way that I would answer that is what we have found is that how you sell excess inventory really matters. So, we have a very large network of buyers and sellers. We process billions of dollars in transactions annually. And so behind all of that is a ton of data. And we study that data incessantly to figure out what is the optimal way for our clients to sell excess inventory so that they maximize price. And what I can tell you with 100% certainty is that you could take the same manifest of inventory and split it up, two different ways, and the client will get two completely different results with the same exact buyer base. So how you do it really matters, and focusing on data to figure out how to optimize, I think, is going to be critical going forward.
Okay, great. Another question just came in. Happy to hear that the buyer network is resilient. This is for Garrett. And maybe, Garrett, you may not have the exact numbers, but maybe you give a kind of a guesstimate. What is the portion of online resellers versus brick and mortar in your buyer network?
Yeah, it's really rough. Generally, it's 60% online, 40% bricks and mortar, which is, I think, pretty consistent with the marketplace. Given the number of buyers we have in our network, that resembles that. Now, there's nuances within there. Some of them do import and export. Some of them sell in swap meets in different areas. But generally speaking, it's about a 60-40 split between online and bricks and mortar.
Okay. Eric, another question here. What are the industries with the biggest surprise change? So what would maybe product categories or industries where you see the biggest impact?
Yeah. So of course, grocery, right? That's probably, you go to your local grocery store, you can't see, and that doesn't mean just like, perishables, right? It's kind of the stuff that's in the grocery store. That has been a massive, we saw 130% increase in price. I was watching an auction the other day, major grocery chains selling inventory, and they had a 200% price increase over what they normally would sell it for. So we're also seeing, actually, surprisingly enough, the computer category, right? Everyone's having to work from home, buy monitors. Like, there's huge demand for that, those types of product in our network. So I would say those the essentials, the ones on the left side of Garrett's chart is where we're seeing the biggest price increase. Yep.
All right. Question for Linus. How elastic is the market? We hear of equipment and drivers kind of sitting around waiting for loads. I mean, how quickly can that market come back if this demand starts to shift?
I think fairly quickly, and so you kind of look at what's been happening over the last couple of years, and you think about some of the trends there, and it's been pretty elastic. We saw some tightening at the end of 17 and into 18, and then that came back down, and so right now it kind of really goes back to that essential and that not essential market. I think probably the biggest point in there of inflection is when you have these, you think about carriers who are hauling, automotive equipment and those type of things, as they've flooded into the non-essential market and into the essential marketplace, it might take them a week or two to get back in position because they're now hauling different lanes and different categories and those type of things. And so, it is pretty elastic. And I would say with the abundance of capacity right now, that can move pretty quickly.
Okay, great. maybe for Eric and Garrett, and Garrett, I'll have you go first. What are the biggest geographical differences? I mean, we operate across North America, Canada, USA, Europe. Are there any differences in the markets that we're seeing, or even maybe even across the US?
Yeah, I can't say I've seen significant geographical differences to date. As I think the country at this point is responding in similar ways. However, I think that's going to change here shortly as we're seeing states open up and small businesses allowed to open up retail storefronts again. And with that, consumer demand starts to come back. So I think the hypothesis is it's going to match some of that. Right now, we're all in a state of varying states of shelter in place. And so the geographic differences haven't been as significant. We're still primarily in the big, there's obviously the big 5 states dominate a lot of the demand, but then there's distributed demand across the balance of the United States. And we'll see that change probably in the coming weeks.
Okay. And Eric, how about yourself from the seller side?
The reality is I would say the same thing as Garrett. This is a global pandemic, right? And so everybody's in the same position. And as different jurisdictions, countries, we have pretty strong presence over in Europe, up in Canada, by you, Paul. So as different geographies kind of release shelter in place, as furloughed employees kind of come back to work, how that plays out geographically will I think play out in the secondary market. But I feel like we're in the phase 1 here, where those have yet to be kind of determined.
Okay. Question on a specific product. Sorry, go ahead, Eric.
I will just make one add. So to kind of bring that home to Garrett's point, one of the important things is that as different geographies do open up in different ways, that brings home the importance of having access to that global buyer base, because your demand can kind of come back more quickly than what is around you or what you might otherwise be selling to. So that's part of that aspect of really muting the impact that this is having.
Okay. Question, this is really more of a product category. So business-to-business sales types products, universal dispensers, product tissue, cases of tissue, or cleaning, products that would be, purchased by hotels, restaurants, relative to liquidation expectation. And I guess, I'll interpret this a little bit. Eric, maybe talk a little bit about the expectations the same in terms of recovery, the ability to move that product, and then I'll ask Garrett kind of how the buyers would see that as well.
So I'm not sure 100%. Can you just talk about what specific products you're talking about again?
They're talking tissue, towels, soap, napkins, typically business to business, so it would be cases, not typically what we see from our retailers yet.
Got it. So, what I'm sort of seeing happen is that those types of products, the tissue, things that are like, those sound like essential goods, right, are they're in high demand, right? And so the impact that is having on the secondary market is that there's not a lot of supply, and it's making prices in the secondary market go really, really high. And so I think when you think about the entire supply chain, right, all of the manufacturers of those goods, at some point there's going to be a drop off, right? And when this kind of starts to lighten up, people are going to have a backlog in their homes of toilet paper and those types of products. So they're not going to be consuming them. And so you should sort of see that second wave of overstock inventory, but it might actually appear up the supply chain a bit, up in the manufacturing side. So that would be how I would answer that question. I'm not sure if that actually accurately answers the question that you're asking.
Yeah. And Garrett, so commercial type products versus consumer type products from a buying perspective, any differences there? Do you think that they're equally absorbed?
Yeah, I think nothing much to add based upon what Eric said is, you'll see an immediate influx of demand, higher demand than supply, and supply will normal out, and then we'll see a normalization of the supply and demand curves and get back to normalcy there. That's just a classic response to the recovery, I think.
Okay.
Yeah. Based
All
on
right.
the way you rephrased that, Paul, I think I did answer your question the one that you were asking. So, sorry.
It's okay. What I'm going to do is, we're kind of over our time that we allotted for this, so I'm going to actually close this off. Anybody on the call has any questions, feel free to send them through to me. I'll make sure I get the answers back from our panelists, and we'll feed them back to people. And as I said, we will be sending out a notice when this is posted on the website in case you need to reference it. And we'll go from there. Great. Thanks very much for joining us today. Thanks to the panelists for presenting. I found it informative, and I hope you did too.
Thank you.
Thank you, everyone.
Thank you.
Stay well.